everyone, welcome back to Brainmore Business Hub channel. My name is Mollen Mukuze, the Managing Director of Brainmore Chartered Accountants. I believe that up to now, Brainmore Business Hub channel is bringing a lot of wealthy topics to our viewers. Today in the studio, I'm joined once again by Deon from Constructor. I know Constructor is an online platform where you air finance-related online learning for entrepreneurs that really want to learn more about finance. Welcome to Brainmore Business Hub channel, Deon.
Thank you very much for having me, Mollen. I've looked at a number of your videos as well, and they're very well done.
Yeah.
So it's great that we can learn from one another. Thank you.
Yes, thank you very much. To those that have watched our previous video that we also did with Deon previously, I know when we were on this studio again last time, we were talking more about different financing options. And today I'm glad that we're going to carry over that discussion and a little bit go deep into two types of financing. So those that haven't watched that video, please go check it out. I had a discussion with Deon around financing option. Yes. Okay, so to kick off, Deon, I know today we want to talk about two major financing options. One is purchase order. Can you define what is purchase order finance?
Thank you very much. Yeah, so purchase order finance, the term kind of gives it away, does it not? It is the financing of a purchase order.
Yeah.
So the best way to understand purchase order finance is by way of an example.
Okay.
So let's say you've got a guy, he runs a medical supply business. His name is Tabang. Okay?
Yes.
And he saved up some money and he buys some stock and then he sells that stock on to doctors and clinics and hospitals.
Yeah.
But every now and again, Tabang gets into a bit of a challenge because he gets a big purchase order from a large blue chip organization. Let's say a large Mediclinic or one of those. Okay.
Yeah.
Now, Tabang has challenges on two sides. Because on the one side, he doesn't have enough capital to actually go and buy the stock.
Yes.
And the supplier that he uses don't want to release the consignment to him because it's a bit of a lot of money now, so they're afraid to do that. And then on the other side of the story, he's got the buyer, who's a big corporate buyer, and the buyers are used to, I'll pay you 30 days from delivery.
Yes.
So Tabang now has a big challenge because maybe it takes 6 weeks for him to get the stock and deliver it and to then get paid. And what does he do in the middle? Because he has to pay his bills and his salaries and everybody else. So he doesn't have cash flow, right?
Yeah.
So purchase order finance is finance for that. It finances that trade. The financier will step in and provide capital so that the bank can procure the goods and pay and deliver the goods to the buyer and wait for payment from the buyer.
Okay. So it's a form of, you already have a backup that you are going to get money from this order because you have it already.
That's actually a very good point that you're raising there, right? Because you've got the expectation that this big buyer is going to pay.
Yes.
Okay. Now, if you talk to financiers, financiers have this rear view mirror bias.
Yeah.
And as part of that, they have this big thing about wanting to secure their capital. Right?
Okay.
They're very afraid. So if you think about commercial property finance, the property is the collateral.
Yes.
Or I'm financing a vehicle. The vehicle is the collateral. But what is the collateral for purchase order finance? It is the purchase order. So if the financier has faith in the one that's issuing the purchase order, then they say, okay, great. So they say to Tabang, okay, Tabang, what you do is you see the purchase order to me, which means that when the client pays, they're going to pay me.
Okay.
And I'm going to take off the money that I've already spent paying the supplier and the other procurement costs, which might include something like insurance, and the finance costs, and then I'll pay you, Tabang, the net sales revenue. Okay. That way, the financier then has that nice fuzzy feeling inside that he's going to get paid. But that means that the financier has to have confidence in the one that's issuing the purchase order.
So I think what you are highlighting there is one critical point. So not all buyers, financiers are not necessarily willing to finance a purchase order from all buyers that just come like different types. So do we have like type of buyers that financiers they'll say no, if this purchase order is coming from this, we're not going to look at?
Well, a while ago I had a client, and he was working for Denel. Denel is a state-owned entity.
Yes.
They make arms, weapons and things like that. And every couple of months he would phone me and he'll say, you know, they were receiving a letter again, they might not get their salaries. They might only get 60 or 70% of their salary.
Yeah.
Okay, so that sort of information gets out into the public sphere.
Yes.
So now the financier says, you can't pay your staff.
Yeah.
But now you're going to issue a purchase order.
Yeah.
And then they get very, very nervous, right?
Yeah.
Or you read about the news, the Auditor General has issued a report and he's looked at all the municipalities. And very few of these municipalities will make their audits, right?
Yeah.
Then the financier says, yes, you know, I don't know if I want to believe in purchase order from an organization that where there's corruption and there's maladministration.
Yeah.
So then they don't want to do that. So typically what you will find is that they don't want to believe a purchase order from municipalities, government or state-owned entities.
Okay.
But there are some exceptions.
Okay.
Strangely, ESCOM, for instance, is actually a very good buyer.
Oh, okay.
So it's not an absolute, but if it is now a municipality deep in Mpumalanga somewhere, you know, then the chances of them believing that purchase order is low, very low.
So from what you are just saying here is the critical part for my purchase order to be financed is who gave me the purchase order. And the financier is comfortable to take risk believing that you are going to be paid.
Correct. That's I would say is the first of three elements.
Okay.
Because the first is I must believe the purchase order because that's the anchor.
Yes.
That's my security, right?
Yeah.
The second thing is I must believe the supplier.
Okay.
Because I'm now the financier, I'm going to pay the supplier,
the
right?
money. Yes.
And there the money goes.
Yeah.
So I'm hoping that the supplier is going to actually deliver.
Yes.
Now, recently we've had this proliferation of solar equipment.
Yeah.
Right? Because ESCOM, you know, and everything that goes with that.
Yeah.
So a lot of people want to buy solar equipment. But now, of course, almost invariably, there's a whole bunch of oaks who's now getting solar equipment, and then they're getting it from some dubious country somewhere. So the financier is going to say, well, who's these people?
Yeah.
Can we believe that they are going to deliver the product?
Yeah.
You know, if my money goes there and they're 15,000 kilometers away somewhere in Asia and they don't deliver, how am I going to get my money back?
Yeah.
And the third element has to do with the actual product.
Okay.
Because the product must meet the expectation of the buyer.
Okay.
So I remember a while ago I had a guy who phoned me and he wanted to procure iron ore for a local smelter. So the smelter would take the iron ore, smelt it, and then they would make iron. Right? The purchase order said A-grade iron ore. Now, I'm a finance guy. I wouldn't know. I don't know A grade from B grade or any grade, right? And none of the financiers is going to know this. But this guy was going to procure the goods from a mine in Zimbabwe.
Yeah.
Now, the financier says, hold on. 50 tons of iron ore comes over the border. And the buyer says, but this is not A grade.
Yeah.
What do I then do with this heap of coal?
Okay.
So what you will find is that financiers wants to know that it's a credible buyer.
Yes.
It's a credible supplier, and the product is there's no performance risk in the product. So typically they want a finished product.
Okay.
They want something that's already been made. That doesn't need to be assembled or made or something like that.
Yeah.
Because then the chances of the buyer saying this is not what I wanted is very low.
Okay.
So they want to see all three of those elements.
Oh, okay. Oh, so which means to the business owner now, what is it that I need to look out for before I even want to approach the financiers for purchase order? So, which means as a business owner, I need to do my preliminary due diligence.
Absolutely.
To make sure that is this supplier credible as well? Is it a well-known? And am I going to do business with them? Is the product and the history, the reviews around the product as well? Yeah.
Absolutely, yeah.
Okay. Oh no, that's very interesting. I think I really didn't. I know purchase order finance to say you need to have a purchase order, but the components that you really explained, I think it's worthwhile to our viewers who have already dealing with big companies, have orders, but they are struggling with cash flow, that they can actually tap into that. Okay, from your experience, Deon, what are the benefits of purchase order versus other forms of finances?
Okay, yeah, so purchase order finance has a lot of benefits.
Yeah.
Well, the most important is that the bank can get the deal.
Okay.
Right? I mean, he can get the deal, so he can make the money, right?
Yeah.
And it allows him to get his foot in the door.
Yes.
So maybe he's a small supplier,
yeah.
he's done small deals, and now suddenly he can actually fulfill a big order.
Yes.
Which might open the door for other opportunities for
Wow.
Tabang as well. But there's other benefits as well, because what happens very often is the guys who do purchase order finance will specialize in a certain field.
Okay.
So they know a certain sector of the economy.
Okay.
And they understand the mechanics of the whole supply chain process.
Yes.
So for instance, the bank gets a purchase order on the 1st of June.
Yes.
And his profitability is very much dependent on the rand versus, say, the dollar.
Yes.
So he does, if the dollar moves against him, it may impact the profitability of his sale.
Yeah.
See? Now, often what happens is the financiers
Yeah.
will go and, as part of the deal, buy forward cover for you.
Ah, okay.
Which is
okay.
a type of insurance that protects your deal against
Yes.
the currency moving against
Yeah.
you.
Yeah.
So they can do stuff like that. And also what they very often do is they can package deals for you. So they can bring down your procurement costs, your
Okay.
transportation costs,
Yeah.
importation costs, which then makes your deal more profitable for you.
Okay.
So there's lots of benefits in terms of working with people that
Yes.
specialize in a certain
Yeah.
sector
Yeah.
of purchase order finance.
Yeah, I can imagine. Let's say you are still small, you are in the value chain, you are still growing as a company. You don't necessarily know how to cover against the rand dollar fluctuation and so forth. But if you work with financiers that specialize in that, you pretty much get a lot of advantage, which is great, especially for smaller to medium organizations that are really thinking of growing their businesses. But cash flow is a problem. But partnering, so it's purchase order finance like a partnering kind of with the financier to provide and deliver what you need to.
Yeah, perhaps in a future conversation we can talk about invoice discounting, which is really purchase order finance, but almost like a permanent relationship between me and a customer, between a lender and a financier. Purchase order finance is ad hoc, it's per transaction, right?
Per transaction.
But if you are like Tabang and you do lots and lots of these purchase order deals in a year, you get to a point where the financiers start to trust you. And then they start saying to you, but hold on, we've looked at your history. Over the last year, you've done 2 million rands worth of transactions. Why don't we create a facility for you that it creates more certainty for you, brings the finance costs down and allows you to plan ahead a little bit further. And that can be very useful. Also, what happens then is the bank becomes a bigger buyer for his suppliers. Because the bank used to buy small little amounts from his suppliers. Now he goes there and he starts buying larger consignments, which means that he can start to negotiate better rates with the suppliers. And after a while, the suppliers are starting to say, well, okay, for certain deals, we'll give you a credit. We'll give you some terms. Now it becomes better and better and better for the bank.
But I know when you spoke about the challenges, if maybe the purchase order is coming from government, what are some of the challenges as well that people get when they want to get on purchase order finance, besides maybe looking at where the purchase order is coming from?
So for me, the major problems has to do with things such as the product. So I don't know if you remember a while ago in the news, there was this big story about this fence that was put up there on the border between Zim and South Africa. And the fence was falling over, right? Okay, so the people who actually erected the fence did not have the skills. So the financiers are afraid if your purchase order is to do work. Right? Because then they say, but do you know how to do this work? Are are you qualified? This whole story around solar is a very good example.
Yeah.
I get people who get purchase orders for solar equipment, but the people who's going to install it, are they qualified? Do they know how to do this work and or not? And if they're not, then the financier is going to be afraid.
Yes.
Especially if the purchase order says something like installation, then I just want to cry. Because what does installation mean? Who's the subcontractors that's going to do the work? You know? Then you're going to find they're going to say no. Because it's not clear to them. So the purchase order must be clear.
Okay.
And then if you have a business and you are in that situation, or your purchase order is from a buyer that the financiers are not going to want to give you the funding for, then you might consider something like an unsecured business loan.
Yes. Because that was my next question, to say, okay, let's look at the purchase order finance versus unsecured business loans. Because from what you have just said, purchase order finance, not everything will really qualify for that. If the product is not really a finished product, you have challenges there. If it's a service, installation and all those kind of things, you have a challenge there. So when we look at unsecured, let's talk about unsecured business loans.
Yeah, so the first thing I would say is the name is a little bit of a problem for me. Okay.
Yes.
Because people think that an unsecured business loan means that if I don't pay, it's okay.
Yes.
No. Okay. No, it's not okay. Okay. It's a personal loan for a business.
Okay.
What it means is that the loan is not linked directly to a certain asset, like a purchase order or a property or something like that. It's not secured by an asset. Okay. But it still means that you, as the person who's borrowing the money, you're still liable, which is often why that you will find that they want to see the personal credit history of the director.
Yes.
And they want the director to provide a statement of assets and liabilities, and they do a credit history and all of those sorts of things.
Yeah.
And they often require the directors to sign personal surety for the loan.
Yeah.
Okay. So unsecured business loans are for small amounts, less than R1 million.
Okay.
Over short periods, sometimes weeks or even just a month or two. Okay. And it's at very high rates. It's at high rates because it's unsecured.
Okay.
To get an unsecured business loan, the thing that financiers look for most is cash flow.
Okay. Your history.
Yeah. So let's say Lebo has a hair salon.
Yeah.
Okay. And she has 5, 6, 7 clients a day. Right? And she's got one of these card machines that the bank now gives you. It's very nice. Everybody pays with their card machine. You don't have to have cash and somebody doesn't rob you and all of that, right? Which is nice, right?
Yes.
So she's got one of those machines. What the data from those point of sale devices can show is it can show that Lebo does lots and lots and lots and lots of transactions.
Yes.
There's lots of cash coming into this business. Financiers like that.
Okay.
They like it. They would rather deal with somebody who does 500,000 per year on that basis than some Okie who started last week Thursday a PPE business and he's never done any transactions, because then they don't have a track record. But let's now say Lebo has a cleaning business. She cleans offices. Right? And she's got lots and lots of clients, and now she also gets the opportunity to provide some PPE contract. Then they are going to say, okay, hold on, she's got a history. There's lots of transactions. Yes, she can generate sales, convert sales into revenue. Okay, cool. And then they're likely to give her a loan like that.
So what I'm picking here from unsecured business loan is the history, track record. Your business records matters more to prove that you have some sort of cash flow that is coming, that you'll be able to pay back, because that's the most important part. Are you able to generate something to pay back?
And it doesn't have to be financial statements. What you'll find is that you have to, for a commercial property loan, for any form of asset finance, for a trade finance facility, you have to have comprehensive, audited and signed financials. But for purchase order finance, they're not interested. They're interested in the buyer, the product and the supplier, right? And for unsecured lending, the thing that they're looking most for is that flow, that cash flow. If they see that cash flow, even with point of sale device, then they are more likely to give the loan to you, even if you don't have financials.
Yeah. Okay, so let's say we have viewers that are looking at or just listening to this conversation, and they are thinking, okay, which forms, what to consider if I am to look at purchase order versus business loan. What can you quickly say versus business unsecured loan? What are the key things that I just need to look at for me to, I know purchase order is saying you need to have a purchase order, but it doesn't necessarily mean that you're going to qualify for it. So the considerations around that, what are the things that they need to?
So for me, small business loans is for a startup business.
Okay.
2 or 3 years going, you don't have financials, but you can generate cash flow. Okay. And you want a small amount of money. Maybe it's to buy stock. Maybe Levo wants to buy stock to sell to all these ladies with their hair and everything, right?
Yeah.
That's fine. She can get that. Purchase order finance, it has to be a credible buyer.
Okay.
It has to be a finished product, and it has to be a credible supplier.
Okay.
Purchase order finance is going to be lower cost.
Okay.
And because purchase order finance is directly connected to a transaction, it's easy for a business manager to figure out the profitability of the trade.
Upfront.
Because I know what the cost is going to be, and I can say, okay, well, sales revenue minus cost of sales, and I can work it out, and then it makes sense to me. Okay. So what you will also find, which I haven't actually mentioned, is when financiers look at that transaction in purchase order finance, they want to see a gross sales margin of no less than 30%.
Okay.
If it's less than 30%, then they start worrying that there isn't enough fat to accommodate the finance charges and to accommodate the procurement costs and things like that.
Okay. So it's the gross margin is very important. That will also show that is this thing profitable. Maybe you're just going to sell it, and it's a huge cost kind of equipment that you want to buy, but you're not going to sell it at a profitable. So,
and it's easy with purchase order finance to calculate that. It's harder if Levo now wants to borrow money, and she's going to use some for this and some for that, and she's going to buy some. Then it's kind of really hard to actually make the calculation and say, does this make sense? You know, which is why I would always say to small business people, build a relationship with an accountant. Put in place good accounting practices and processes in your business, so that you can make that sum. Because one of the things that I find, when you're talking to a credit manager at the financier, you're talking to a person who is a human being. Right? And they must have faith in you. They must have respect for you. Right? So if you are the sort of person who does that sum beforehand, and you know your stuff, okay, then you are also creating confidence with that person. And they are more likely to then want to do business with you. But if you looks like you don't know, then they're not going to be very confident.
Okay, so just to wrap up, Deon, what advice can you give to business owners who are considering using purchase order or unsecured loan? What advice should you give to small businesses in general around financing?
So the first thing is is formalize your business as a company. Make a clear separation of your personal finances to the business finances. Because now you want a loan. Okay? Are you going to submit now bank statements that's got your school fees and your insurance and your tickets to the movies? That's not what you want to do. You want to separate this so that the financier gets a statement that is going to be just business related. It makes it easier for them, and it also looks more professional. So make that split. And then put the right processes in place in your business so that you can show that you figured this out beforehand. You're not bringing Tata Machan's deal here. You figured this out. You know that this is a profitable deal. Okay, that just imbibes confidence with the financier. And then you do have to do your background check.
Okay, Thank you very much for that. To our viewers, I know you have benefited a lot from this conversation, a conversation that we always say as accountability partners, we have to bring people like Deon to educate and tell you what you need to do for you to secure funding for your business, because funding is very important for your growth. If you don't have access to it, it's a problem. So thank you very much, Deon, for that. Don't forget to subscribe to our channel, hit the like button or even share button. Comment on the comment section below, and Deon's details will also be shown just below. Thank you.
Thank you very much.
Thank you.